Welcome to RFI's Banking Uncovered, the podcast going behind the industry PR, the media spin, the product awards, and the investor reports to look at what's really going on in the customer data, and to ask global thought leaders about their thoughts and views on the future of banking and payments. Hi, Chloe James here for Banking Uncovered. I'm really excited about today's podcast because I'm speaking with a great friend of mine, actually, a peer and a leader that I really admire. I've known for many, many years now, Lisa Claes. She's the CEO of CoreLogic International, a US property data and analytics company. Lisa looks after their UK, Australia, and New Zealand operations, but reports into the US and is very across the US market as well. She's a member of Chief Executive Women, active on many boards, and she has been throughout her executive career. And it's a great and a long one, I should say. We originally met when she was an executive director at ING. She was also acknowledged, I'd love to say, in the Australian Financial Review Power issue as the top female influencer within the Australian property sector. So a huge accolade there. Lisa, I'm so happy to have you on Banking Uncovered.
Thank you, Chloe. Wow, after that introduction, it's all downhill now.
No, absolutely not. But I really wanted to cover off sort of the time that I've known you. I originally interviewed you for the Women in Leadership series that I ran for RFI Global, which was years ago now. I want to say that's probably about 10 or more years ago. So speaking to executive women in the industry about trials, tribulations, the industry trends. So, anyway, going ahead into
still standing.
Yeah, exactly. Long-standing friendship and leader. So I really want to ask how you are. How's your year been? How's the industry looking? And how are you feeling coming into December 2024 now?
Yeah, well, I'll be pleased to see 2024 out. However, we've had our business in 3 geographies has had a stellar year. We're very privileged to serve with various solutions: banking, insurance, real estate, government utilities, telcos, and many other segments. So it's a very eclectic mix, and we're in the business through our data analytics and technology of solving customers' most pressing problems. So fortunately for us, there is no shortage of problems, and we have many solutions to help them solve it. So it's been a great year. Also in our US parents business as well. The US market, particularly if you have anything to do with property, has certainly been in a hibernation phase for many years, but it's definitely on the recovery. A long way to go. Nothing to do with the election either. However, that market is beginning to look up as well.
That's fantastic. It's a great segue sort of into our questions, because we are going to talk about the US market, and we've got some really interesting statistics there from our Macro Monitor product at RFI. I wanted to start off with prefacing this first question with a trends and predictions report that RFI released. It's a 2025 trends and predictions, and one of the leaders at RFI, Alex Borman, wrote a section about property and covered off all the different markets in property. And I'm keen to get your view on a couple of them here. So RFI's Australian data is, as you've just mentioned, really indicating, although we've got the cost of living pressures, there are signs of positivity re-emerging, which is really fantastic. We're showing a steady increase in consumer sentiment, which is happy. And we're now seeing in the most recent waves of data, Australians actively saving towards a house deposit. You also look after the UK market, and we're seeing it being a little bit more buoyant there as well. UK confidence is rising a little bit. The Bank of England decided to cut those base rates. Expected to be more rate cuts in the new year. And we are seeing that over a quarter of Australians are actually saying they're likely to make more repayments, extra repayments on their mortgage over the next 12 months, which I hope I'm one of them. That would be really great to do that. But your view there on the UK and Australia, and we're going to go over to the US in a minute, but how you see the industry responding to these sort of positive changes and positive sentiment. How can they keep supporting this uplift in sentiment?
Yes, so specifically in, I guess, the home lending space, you called it out, start with the UK and the Northern Hemisphere. It is starting to improve, but it's coming from a really low base. So, you know, the lending industry in the UK almost dried up until about 18 months ago. In fact, a couple of big high street banks had stopped lending. Such was the state of the economy. But that is definitely starting to recover. But as I said, from a low base. The focus in the UK is very much around, if we're talking about a property ecosystem, around energy. Something that our business in all countries produces many solutions in respect of that. But there is an enormous push from the government through various tranches of funding to either through energy companies or directly to homeowners to help or incentivize homeowners, or those that serve homeowners, to make their homes more energy resilient, so that in the quest for carbon neutrality in 2050, which seems a long, long way away, that they are making positive steps. Knowing, of course, that the UK's housing stock, there's a high proportion of social housing in the UK. It's a colder climate. It's older stock. And as some Englishmen Riley point out to me, got the bombs blasted the buggery out of the quote, the housing stock in the wars.
Of course.
It's got a long way to go, but that is something that homeowners, second to getting into a home, and yes, interest rates are coming down, that is front and center of that, because the costs of energy, they say heat or eat in the UK, are absolutely staggering. I think we in Australia, I think ours are high, and I think in that respect, we've definitely, there's a new norm going forward. I don't think anyone thinks they're going to go back to the way they were, but that is something that's front and present on the minds of UK homeowners. In Australia, we have, we're just coming off quite a steady trajectory of growth in most capital cities except Melbourne, which has been a very low single-digit growth rate for the last 5 years. Actually aligns with Mount Isa and Alice Springs. Funnily enough, I say try getting a soy latte out there. But we're just seeing our indices were released a couple of weeks ago, and we're just seeing that the plateauing of many of the high growth capital cities such as Sydney, Brisbane, Adelaide.
Where
yes,
I am.
Adelaide I think is number 3 in the
Adelaide's just skyrocketed.
Yeah, Melbourne's number 6. So,
I think we got in just in time. We bought a property about a year ago.
Yeah, well,
and
good
it
on
was
you.
good timing.
So, yeah, so that's why is that happening? Yes, of course, there's cost of living pressures, but there's just a lot of stock on the market at the moment. So it's what they call a buyer's market. No doubt, of course, if and when the RBA lowers interest rates in, I don't think many people are talking about February anymore. I think it'll be probably maybe the latter part of the first half of the year. That tends to inject a lot of optimism and confidence into the housing market. I think we're probably going to go through a holding pattern in the property market, until there's some exogenous stimulus brought into the market. And pretty much New Zealand is definitely. Funnily enough, I find New Zealand is almost like a bit of a pioneer in terms in respect, insofar as we move together, they tend to touch the bottom before us and start to rise before us, and our market structure is almost identical. But it had a quicker and a deeper drop. It's definitely on starting to recover now as well.
Yeah. So next year's looking pretty positive.
Yes, it is. From a consumer point of view, I mean, of course, affordability is at an all-time low, with taking 12 or 13 years for the average earner to save for the average, or for the medium-priced home in Sydney. But that, of course, is tapered by a lot of Bank of Mum and Dad assistance, which is very, we'd love to have data on that. It's all highly anecdotal, but we know. I know. Survey 1. I've got 2 out of my 3 children in the property market now, and all credit to them. They're doing most of it themselves, but every little bit helps, of course.
Absolutely. I think that Bank of Mum and Dad is it's such a good phrase, actually, and I think it's just so prominent, especially certainly across this market, and anything as someone who has benefited from it, and something I hope that I am able to do one day for my own family, and that's just
look, I think property. This is not financial advice, but I'm certainly, in regard to my own children, absolutely delighted that they've jumped into the market. As as staggering the price and the access paths were, I'm glad they're in. Start to build some equity earlier in their life than later.
Yeah, the bricks and mortar can't beat them, can you? It's there. I want to talk to you a little bit about the US. It was quite interesting because you mentioned at the top of the conversation that you were sort of seeing it being quite buoyant across the US. I want to talk to you about some of the stats that we have and your view on this. And it's RFI research among current renters, and it's showing to us, and this is also in that Trends and Predictions report, that home ownership is no longer a part of the big American dream. The US is a market where financial stability grows with age, obviously. 1 in 4 households in their 50s are struggling in the US. They're indicating they may actually require financial assistance. The next stat is a huge one. It's a whopping 77% of US households are today saying, in our research, and this is who we're obviously speaking with, saying that they would never take out a mortgage with an adjustable interest rate. So they're really this huge reluctance on variable rates. And that obviously limits the flexibility of lenders about, what kind of products they can offer. I just wondered your view on that, and that sort of volatility that we're seeing, and we see that across many markets. What's your view then in the US when it comes to, I guess, that caution, and that perhaps, do you also agree that it's no longer part of the big sort of the American dream to own your own home, or what's your perspective?
Yeah, look, I certainly don't. I haven't viewed any qualitative research on that sentiment. But what I do know is Australia and New Zealand have a exception. They rank exceptionally highly on the home ownership scale globally. As opposed to somewhere like Germany, where home ownership is almost the inverse to us. People are long-term renters. Definitely we're seeing, just speaking about Australia and New Zealand, the proportion of occupation of homeowners just starting to drop ever so slightly year on year. So it is going down. In the US, it's always been a lesser proportion of Australia and New Zealand. In terms of not part of, I've never heard the phrase coined, the great US dream of owning a home. So there you go. But they are a fixed rate market as opposed to our variable rate market here. They do, our average tenure of loans in Australia is, last time I looked, it was about 4.3 years, because people, I'm not suggesting they pay them off in 4.3 years, but they certainly move around, and the variability definitely aids supportability of that. Whereas in the US, it is a fixed interest market. It is a long-term hold, and also remember the fact that they have no liability in terms of their home. So, the stories about putting the keys in the envelope and sending them back, whereas for us here it is personal liability. If you run out of equity or collateral in your home, you're up for it, whereas over there is a house. So maybe your stats are highlighting something in the psyche of the fact that it's not as the home is not as integral to your
desired or something.
Your own personal wealth.
More
because at the end of the day, you can chuck the keys and walk away without any personal liability for it. I'm no psychologist, but that's I'm just but if you look at, I said I wouldn't, the election had nothing to do with the the introduction of buoyancy into the home lending market. However, cost of living, when they say, why did Trump win against Kamala, it's about how he appealed to those struggling with cost of living, which seems to be quite a, universal affliction at the moment. But in a more polarized society such as the US, if you're on the wrong side of the ledger, it's for sure hurting more. So putting all of those sound bites together, that is my way of rationalizing that insight from your data. We haven't got a similar stack of research in the US as far as I'm aware. But very. Now that you've raised it, I'll watch it very closely.
Yeah, it's an interesting one, isn't it? On to I know that you're a really big proponent. You speak to so many banks and lenders, and you're so across the industry. And I also know that you're very into education and the education of consumers and how banks can sort of work with their own customers to sort of help them out. When we're talking about this sort of cost of living, and you said that's, it's a global issue and it's something everyone's talking about. It's such a buzzword, isn't it? It certainly has been for the last few years, even coming out of, the pandemic times. What's your advice to lenders, perhaps listeners of the podcast, bankers and the like, and you've sat in that seat as well yourself in the past, when it comes to sort of educating consumers, what organizations can do to support borrowers when it comes to lending or just choice of product? We do have one stat here that says that globally, understanding of the application process is a key pain point when it comes to dissatisfaction. This is particularly with lending. What do you think can be done when it comes to education and that area across FS?
Look, I think, definitely it is incumbent on banks and banks that make the lending process seamless and easier are probably going to be preferred or prioritised over others. So, putting aside the mechanics of, personal balance sheet and ensuring that, a potential borrower has, enough funds to service the loan with that healthy buffer that's imposed by APRA. And that's not optional. That's an imperative for all bankers. So I think we've got such a well-regulated banking segment, courtesy of the banks themselves and their response to the central regulators. I'm not going to suggest that, banks could do better by, obeying the rules, because I think they all do. I think for for a bank to differentiate itself in terms of gaining that potential or gaining that borrower, it is on, and I guess I can speak anecdotally of, being on the sidelines of a couple of my children who've just gone through the process. There's a big thing about ease and simplicity and seamlessness. And this is where, brokers definitely help, particularly inexperienced borrowers such as first home buyers, taking away a lot of the documentation and the validation that potential borrowers have to do. There is, time to yes is absolutely essential for all banks. So even if you make it very clear your requirements up front, you take away the administrative burden of borrowers. Having a very expeditious process is important. And, this is where our business certainly plays a big part. We have a full suite of digital valuation tools, everything from your common garden variety AVM to a newer product called Smart Val, which will perform a digital valuation with the same rigor and insurance backing as a full valuation. It does it in hours, not in days. It saves the bank time, saves the customer time, saves the bank money, and gets that potential borrower an answer as to whether the collateral is going to be able to support the loan. I think that once, I've said this for 20 years, there's something about once you do onboard a borrower, some banks only contact their customers in regards to what they owe rather than what they own. And there's so many tools, and of course we provide all of them, but we're not the only ones in the market that can give a borrower a very granular equity calculation of the value of their property on a day by day, hour by hour basis. So I think that once a customer becomes a borrower with a bank, the emphasis and the effort should pivot in a bank to engaging that customer in meaningful ways throughout the lifetime of that loan, knowing that it's a variable market. Loans are very short. There's a lot of refinance, a very high, mid 60% refinance market. Is how do you make sure that you keep that borrower on the books?
Yeah, it's really great. It's really great insight there. And interestingly, I mentioned to you, we purchased a family home here in South Australia about a year ago. We went through a broker, individual broker, and then also through, it was my original bank. We ended up going down the bank route. They're just the ones that made it happen so that we could make the offer and get the home that we wanted. And it's all, and it's, we bought off market, and it was like, you have to tell us today or you're going to miss out. And there's 50 people at the off market inspection. Imagine if it was an on market, whatever. But anyway, went through, got our home. It was a really great process. We had a great RM at our bank. It's one of the big four Australian banks. I won't say the name. He actually called me about a month ago, and I wasn't sure why he was phoning. I thought, is there something wrong? And he actually just called to check in. And it was very interesting. He just wanted to check in. He wanted to let me know how the loan was going, how the house was going. Was there anything he could help with? And that was the purpose of the call. And I actually thought it was real. And he made some comments about rates. He made some predictions about what we might see next year. And it was a really great experience. You've just kind of highlighted
particularly given it was personal as well, but
totally personal.
You can use digital tools to make that connection. Obviously.
Yeah, but it
not
was
as
personal, and
impactful.
I'm sure he had a list that day, and he's thought, I've got to call these 20 this day, and I was one of them. But it was just a very great experience, and I just think when you have those experiences, what was the comment you said? It was about the bank letting you know what you owe rather than what you own, and
Yes,
he was talking to me about what I sort of own.
which you
I
own.
own
Yeah,
I own the mortgage and part of the house, but it's just a point there on customer service and personalization and. I don't know, I'm just giving my example there of that was a really good experience and I felt connected, I felt cared about. Anything else we can help you with? You know, let's just say in the future we buy an investment property. I mean, I'm 100% going to him just because it's been
fantastic.
such a great
I hope
experience.
he's listening, Chloe.
Yeah, I'll send him a copy of this. Just a little bit to go, Lisa, because I know I know these things always go really quickly. I know you spend a lot of time traveling around the world, and you've I know that you've spent time over in the US at Harvard, and I know you've done lots of different experiences. I want to talk a little bit about disruption and innovation, particularly innovation. You're obviously very interested in the innovative space and a lot of the digital kind of points of CoreLogic that you've mentioned now. What's some great innovation that you're seeing at the moment that really, and perhaps around the world, that sort of caught your eye? It doesn't even need to be in financial services. I'm interested in your perspective on innovation, what you're seeing that you think is really impressive at the moment.
Yeah, so I won't double click on AI because I think that's there is a lot of innovation in AI, and our
There
business
is.
uses it quite actively. It is, you know, we we sort of have so many processes and solutions into which AI is embedded. So I won't, in the interest of time, I won't talk to call that out. Look, it's hard for me, call me narrow-minded or tunnel vision, but it's hard for me to look beyond something that we've just launched more recently, which I'm very excited about. And it responds to that call to action around energy and climate. But
Yeah.
in respect of this innovation, it is responding to the energy crisis. So, you know, I mentioned the UK. Australia doesn't do too badly in the stakes of carbon emissions from homes. 24% of our energy consumption comes from in the household, which contributes to 10% of carbon emissions in Australia. So, given that's a material factor, we're very energized to, you know, bring insights through data to customers, either through our segment partners or directly to customers. But an innovation we've recently launched, and there's a report that Tim Lawless authored called Amped Up, we just released yesterday. And it is a solution called Rapid Rate, which is an AI driven analytic which CSIRO produced, which we have a long-term partnership married with our property universe, and it has many inputs. It can be, you know, the obviously it's the location of a home, the composition of a home, the you know, the roof profile, the climate position, many inputs, but it can give the equivalent of a neighbours, you know, the NABERS rating, which applies to commercial properties. It can do it on a high proportion of residential properties in Australia, and you know, and beyond that, beyond the bald rating, can give insight as to why the rating is what it is. In the UK, which is a more mature market in this respect, we have created and bought businesses that, you know, taking that innovation that step further, that can actually give a prioritised list of measures, the costs thereof, the chronological order that they should be executed, the cost saving you'll get through your energy bills and the reduction in the carbon footprint. So it does the full, our UK business does the full life cycle on a singular property unit or a mass, a council estate. So that's definitely the road that Australia is following. We're, many steps behind at that case. At the moment, we don't have the regulatory imperatives that operate within the UK yet, but it is something that is just very clever that you can rate your home without any physical inspection. And understand why it sits where it is. Oh, the other factor is building code, like the year it's built, because homes generally past 2010, newer homes, probably very obviously, tend to be equipped with more energy saving materials.
Exactly. The materials of the house and everything. Oh, that's such an interesting space. So energy sounds like it's kind of one of your on your agenda at the moment in a space.
It's definitely one of our strategic pillars, given our, privileged, position that we hold with many of the segments. All segments have an appetite for that sort of insight and platform through which this will be served to them. Can't do them all at once, but definitely speaking with our banking customers, because they're very concerned about, from a portfolio basis, so their asset portfolio, the homes against which they lend, what the state of that portfolio is, because there will be, apart from regulatory reporting next year, there will be no doubt a charge like there is in the UK against the carbon quotient of a bank's portfolio. So that's a, and apart from all the altruistic goodness that comes from, helping people build better lives by providing insights to have more resilient housing stock, it's saving on their energy bills. There's many positives.
There absolutely is, and it's the quality, right? You're talking about good quality, and that's, that goes all the way into the construction industry and the building of houses to begin with, and then as you said, the materials that they're made from, the stock and the quality that the bank has ownership of. Is such a complex space. We've got to wrap it up soon. I mentioned that I interviewed you for a Women in Leadership series many, many, many years ago now. Both of us. I did want to ask you an industry related question, and it was around the gender pay gap. It's a totally shift in topic and conversation to what we've been talking about. And I'm interested in your view. I had an interview last week with Catherine Petralia, who was the founder of Cabbage.
Wow.
Very successful American entrepreneur. And I asked her the same question and keen to hear your view on it. And it's all around this, the very widely publicized gender pay gap, especially in the banking and financial services industry. And just wondering your view on that. You sit on a number of boards as well. So in that board position, I'm sure that you have a perspective on this, but what you think can perhaps be done to shorten this gap of equalize.
Well, pretty bluntly, have more women in senior positions, because it'll bring the average up. But having said that, even women in senior positions, there is at play some pay disparity. Look, I think the government agency WGEA, WGEA, is doing some wonderful work in terms of exposing. All organisations have to report on what that is. So I think, in terms of solving problems, having exposure of what the problem is the first step. And, many organisations have, I think 90% of organisations have gender targets. And then I think there's about 75% have pay disparity targets as well. So you've kind of got that overarching broad brush drivers at play. So, hopefully those targets won't be paid mere lip service, that,
Mm-hmm.
boards will, use the insight from their data and those targets to drive towards a more equal world. The other, so if that's one side of the pincer group, the other side is having, more women in senior positions. Women can't be what they can't see. I think, I unashamedly don't have any. Well, we do have gender targets in, the broader organisation, but in, 50, 60% of my executive team are women, not tokenism, merit, and that has increased, throughout my tenure. And I think it's, one, that I have no bias, obviously, towards women doing highly impactful executive positions, children, other responsibilities or otherwise. But I think it's also the tailwind is that they can see that I do it, and that, if I can do it, Lisa can do it. So can I. So I think, a more equal world at the more senior levels. There are a lot of organisations will say, "Oh, we've got over 50% women," but the demographic spread tends to be pear-shaped. A lot of the women are at the bottom of, or the lower ranking, if I could say that without any disparagement, at the bottom of the organisation.
Just
Not in the,
seniority, I think that makes
not in the senior, the senior ranks. If that in itself will pull the median up, if you have more women, and then, I think women in senior positions, apart from the external metrics that the organisation have to meet, I think, I know myself and others, they would be agitating pretty furiously if they got wind that within their strata there was pay disparity. So that's not a silver bullet in itself. However, yes, it is. Many of us have daughters, and you just want a fairer world. I'd say the same if it were the other way, with the disparity favouring women, but unfortunately it doesn't. And we all know the reasons as to why that has evolved to where it is. There is changes afoot. It's always very slow. And I do understand there's good reason why you cannot, within a singular annual pay cycle, redress it completely, but you do need to have a plan, a short-term plan, to meet parity in your businesses.
Absolutely. I think you make a great point there about transparency and how, now it has to be reported on, and that's just a great start for it to come from sort of a legislative standpoint. And then within organizations, there's the transparency, you have to do it, and then hopefully the knock-on effect and flow on. I love that you said you can't be what you can't see. I'm such a big believer in that. I admire you greatly, and there are senior sort of leaders throughout my career who I've always watched and hope to follow in their footsteps, and then I hope to set an example for my daughter, and her to do whatever she wants to do, and to lead and speak up and be heard. So anyway, I love that question. So gonna wrap up. 2025 is just around the corner. When we started the call, you said you're just working to that finish line. There's so much to do, so little time, but just very, very quickly, Lisa, what are you excited for next year and to achieve with CoreLogic?
Yeah, well, I think, something I can't control, but, a seemingly normalization of some of the markets in which we operate, which is, which will give some tailwind, but you never rely solely on that. What we are doing in energy, climate change, property resilience, with our business partners is extremely exciting. Our innovation revolution in the valuation industry, for which we are, I hope we've earned our fame there, with our smart valve solution, which is being widely taken up now, which is fantastic because it it's good for every stakeholder in that value chain. I haven't spoken about real estate, but and you did ask me about innovation, but we've got some incredibly cool solutions for that. Our priority for them has been the real estate segment, which ultimately help agents find a listing, because that's the oil, that's their gold, is to find that listing. And we have used AI tools to help real estate agents intelligently mine their CRMs, aided by activity from external platforms, including their own website, to give agents a very forensic view on the hottest leads in their CRM. So a lot happening in that space as we've moved way beyond having a great research platform now into marketing services and lead generation tools. So it's very exciting. The election's behind us, so that the US elections behind us. So
That distractions
really,
past.
yes, that's right.
Yeah.
People
Fantastic.
can breathe again and get on with it. Yeah.
I'll breathe again and get on with it. Okay, with that, thank you, Lisa. Thanks for your time. Thanks for coming on Banking Uncovered. It's been really great speaking with you.
Thanks, Chloe.